So these changes, they sound like they're enormously important, that they should be very, very controversial, that they're going to have really big, far-reaching consequences for the company. But we don't really think that that's the case. We think this is actually a relatively routine bit of corporate simplification, a kind of corporate tidying up exercise to deal with a complex bit of historical legacy that's simply no longer needed in the world that Shell now lives and operates in.
What are these changes going to allow Shell to do that they weren't able to do before?
So I don't think these changes are going to suddenly allow Shell to do lots and lots of things that they weren't able to do before. I think it's a question of allowing them to do things more efficiently. So by unifying and simplifying the corporate structure, it will allow the company, in our view, to return capital to shareholders in a more efficient way, to give them more flexibility, and to allow them to operate in a somewhat simpler way when it comes to engaging in sort of corporate transactional type of activity. And as shareholders, generally speaking, unless there's a really good reason not to look at these sorts of simplification exercises favorably, we tend to say that simpler corporate structures that give companies more flexibility are good things.
Nick, I just want to note for our audience that LGIM is a top 20 shareholder of Shell. And there's, as you mentioned, a lot of talk now about what this will mean for shareholder returns in the future. I mean, what's the sort of pace and scale of shareholder returns you think we can expect from Shell?
So when we look forward at the next 10 to 20 years for this company and for the entire industry, we think it's really clear that the energy transition and decarbonisation are going to radically up the level of uncertainty and complexity in which this industry operates. Nobody really knows, given the huge uncertainty around climate change and the outcome that the world is heading towards, whether we're going to see continued growth in oil demand or we're going to see incredibly rapid reductions in oil demand. We hope, we would expect as a base case that oil demand is likely to start to come down and probably come down quite quickly. And in that context, for a company of Shell's size and the huge uncertainties that there are around investing in projects, new, big, potentially multi-decade complex projects, that shareholder returns and choosing to return capital to shareholders in the context of that uncertainty is clearly something that makes a lot of sense for investors. So we're excited that this industry, as it heads past the point potentially of peak oil demand and needs to invest less and less of shareholder funds in generating new projects, could become even more cash generative as an industry than it is today. And today, the oil and gas industry is one of the most cash generative sectors that investors have to invest in.